Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today, I've got a pretty good one for you. We're going to take a look at the macro picture to see, what we can learn looking all the way back to the beginning of Bitcoin, all the way back to around 2011 anyway, and just to see if we can get some out of the box thinking. You guys know what this channel is about. I'm not trying to just focus on the teeny tiny small moves on the 5 minute or 15 minute. For that, you can find lots of traders who are just going over pure technical analysis in a pretty straightforward way where perhaps you can do live trading with them or whatnot. I'm looking for those much bigger moves that are more on the macro and then also trying to throw in some creativity, think out of the box, get out of that crypto bubble so that we're just not copying what every other ditto head on crypto Twitter is saying, so that we're not just nodding along and being those fools who target the same price and then they all get burned because of course whenever a majority of the market targets the same prices, if the market makers are going to come in and liquidate them, right? It's just too obvious. It's low hanging fruit, easy pickings. So without further ado, let's dive in and take a look at what we can see on the chart is basically, Bitcoins have this path where it basically just curves up and you can see there's diminishing returns over time. And I really don't give a care about lengthening cycles or shortening cycles and all that stuff. I honestly think those are just filler episodes for people who are just, in the bubble too far. Who cares how long these things last? The only thing that we care about is the actual moves that are being printed and, the price action that we can see. So what I just want to put on the screen is, that stock to flow model that everybody is typically using. Let's go ahead and just take a look at one. And here you can see that we're perfectly in that stock to flow. Of course, it's designed around this structure of price action. And so, you know, sometimes it's poked out. You can see it didn't fit in the beginning. It doesn't fit during this type of black swan event. And once again, we're here really at the very bottom, which hasn't happened since the origin, okay, unless you count this black swan event. And what does that suggest? To me, that suggests this might be breaking down. That maybe this model isn't as good as what people thought, and maybe everyone shouldn't just be thinking, about the same numbers and just nodding their head up and down, saying, "Oh yeah, oh yeah, oh yeah," like let's all put our money in right here. Because why wouldn't market makers liquidate you? Why wouldn't the market take all that free money if everyone was just targeting the same number as a bounce point? It's sort of like how everyone was targeting 100,000 or whatever, and then we never reached 100,000. Now, I'm not saying those type of things always happen. I'm just saying that, you know, this is a pretty popular concept, this log curve kind of model. And if people are over focused on it, you know, to too high of a degree, it might just break it down. Additionally, that's only based upon Bitcoin's history. And guys, like the world existed before 2011 or whenever that curve was actually collecting data. And so different types of macroeconomic and global economic conditions can exist, other than the last 10 years. Okay, like we can enter different types of eras. For example, this was an era, pardon me, of hyper globalization. Everything was getting cheaper because all the countries in the world were trying to trade with each other at faster and faster rates, and so hyper globalization occurred. Additionally, it was also a period of money printing, just continuous money printing. What happens if we go into a period where there is increased nationalization, nationalism, protectionism, and then fighting inflation? Could we perhaps break down from this model that everyone has just fallen in love with and gotten addicted to like a drug, right? I don't know. We don't have proof of that yet, but I just propose maybe it's possible. Maybe this really is a double top, and that we are going to see something that we've never seen before on the Bitcoin chart, which is it acting strangely. And we only have like one, two, three, real, kind of clear periods on the Bitcoin chart, and then it's pretty muddy before that. And only the last two really have like a lot of logic to it. This one was just kind of still really stretched out and just it just doesn't compute, like you can't really make much of it. And then we're bending so fast that this era here doesn't look anything really like this one. This one doesn't look anything like this one. This one sort of looks like this one, but let's face it, this is totally different, okay? And then should we really expect that this era is going to be the same as this, at the same as this, the same as this? No, no. And so these guys who say, "Oh, Bitcoin's never done that before," come on, guys, like, shut up. Like, what are you talking about, right? Like, these guys, I swear, they just want to follow the herd, and basically walk off a cliff together. You guys have to have independent thinking. You have to use independent reasoning. And just because something happened once or twice before, it doesn't mean that it's going to happen again. And in fact, if you're only basing it upon like a previous cycle, or worse, what just happened the previous summer, then it's just pure idiocy. It can be just a coincidence. It's just 1 point of data. 2 points of data is a coincidence. 3 points of data maybe is the start of a trend. And then if you can't even get to a fourth point of data, I mean, you're honestly just shooting in the dark anyway. All of this stuff has to do with statistics, and you're only looking at the history of Bitcoin. It's just some type of circular logic, some type of feedback loop of people just nodding their head and just, kind of superstitiously believing certain things. And I see my favorite traders doing it. They look at like the accumulation, or all these different charts where they just find like 1 point of data, and then maybe up to like 3 points of data. And they say, ah, yeah, Bitcoin's never done that before, so it must be doing this. It's like, no, you only have, 3 points of data. Most of them only have 2 points of data. And a lot of them, in fact, I would say the majority of people on Twitter and stuff, like they just compare it to like 1 point. They're just like, oh, well, we're doing exactly what we did here. And they're just pointing to 1 point of data. Again, like 1 point of data is just arbitrary. 2 points is a coincidence, and 3 points maybe is a trend if you've really isolated all of the circumstances, and most people are not that diligent. So again, like let's go ahead and just see what's going on here. We've already taken a look at that log scale, and I think it's breaking down. We'll find out, but I just think it may be breaking down. Let's see what we can put on here. If we just put on like a curve, like just thinking for ourselves, right? Not thinking, what everyone else is using, right? Which is this one, right? But if we just think for ourselves, you know, and stop just nodding along being a ditto head, then what we can actually see is this kind of curve being printed and not really the curves that other people are looking at. And what would this suggest? Well, we have all these clean touches at the bottom here. Of course, we can perhaps on the weekly, ignore the, this hyper wick down during the economic crash, but that would still suggest a projection that perhaps could get as low as, $20,000 within reason, right? Within reason. So that would suggest immediately that we're not at the bottom. It might suggest that there is an extreme bottom still waiting to be fallen to. Might that, kind of account for all of these red weeks that we've had in a row? We've never had like 9, or 10 red weeks in a row. But when we have, it's been pretty traumatic, right? Like, all these red weeks in a row, like they tend to be in front of pretty traumatic events. It's not like it just turns around on a dime. These things fall and fall and fall and fall, and then they approach this line that I've marked out, right? So this is, I don't know what to call this. This is the alpha log scale, okay? Because, obviously this one just, it's starting to break down, and we have to really wonder if it's really going to work. You can also see the top of the chart. The top of the chart is breaking down. Like this thing may just be a little over ambitious, okay? Maybe Bitcoin's just going to take a little bit more time than what they thought. Then, I think that was based on real estate and gold, okay? But, Bitcoin is not real estate or gold. It is quite interesting. It's obviously got a lot of value, but the problem is it's its own thing. So we can think about this thing, on its own, but we also have to remember that there are bigger economic pressures, especially on the technology side, that can put in double tops and can bring us lower than perhaps what could bring gold, right? Or that could bring real estate. There might be just different pressures on this type of an asset than on real estate or on gold. And so we can think about it independently from those other log curves that were developed using other types of assets. And then if we want to go further and just say, okay, well, where do we actually have touches on a curve? Then we can even, modify this curve to be a little bit more extreme. And I think while people can generally get, see what I'm getting at here, I think this one might be because I'm using the candle body closes here at least, right? And it's it's a higher price than this bottom, so it's pretty reasonable. Could we tweak this one to be like this and just totally ignore the this dump totally? Yeah, we could. And you know what? This would be quite reasonable. I'm not going to dismiss this idea to suggest that perhaps we are at the bottom. I only am pointing out that there are macroeconomic factors which do in fact push this asset lower than what you would think. Okay? And if it happened once, it can happen again. We don't know that it will, but it can happen again. And so, why don't we just take the most, conservative outlook and just suggest that this wasn't a mistake. This is actually how people behave towards this asset when things get screwy in the macroeconomics, when things get weird in the world and people get afraid or they want to de risk, what if this really is a realistic data point, right? It's actually higher than the price over here in the same era. So I think that we don't have to ignore this data point, right? And I'm just making a hypothesis that this was a realistic, logical behavior of the market. Yes, it was done in fear, but it was based upon logic that exists and probably will continue to exist in this asset. And so then I would propose this kind of a model. This kind of a model, we can see the touch here, 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 and then this would suggest possibly that there would be a touch in this era over here in this area of around, perhaps anywhere in the range of 10,000 to perhaps 15,000, okay? And where would that just coincidentally line up with? Just by coincidence here? Well, that would have a lot of support in this neighborhood, wouldn't it? It would have a tremendous amount of support. And so if we were, to just dive down there in some type of, worries about the world, then it could make a lot of sense based upon how this chart is curving. Now, people will say, we've never done that. We've never broken our all-time high from the previous cycle before. Yeah, but we've never bent over backwards to kiss our own ass before either. And guess what? Bitcoin is bending over backwards, and it wouldn't be surprised if it ended up kissing its own ass one of these days, okay? Like, of course this wasn't going to come back down. here, if this chart is exponentially rising, right? But if it's exponentially flattening, then maybe there will be a period either now or in the next cycle if it continues to flatten or worse depreciates for a small amount of time. There may be a time when it actually just exists in this area. Like the whole next era of Bitcoin might actually exist in this price range before it ends up circling back. What would that kind of look like? Well, let me just give you an idea. You see how we have this kind of, exponential growth, and then it's flattening out, and then there could even be a dip, and then we go on our way. And that would be, if this thing, was rounding out, maybe even held flat or even dipped a little bit, who knows why? It could be any number of things, and then went on its way, right? So, in the future, maybe we could see something like that. I don't know. I'm not really proposing anything that extreme. I'm just saying that as this line slows down, and it has been consistently slowing down, we shouldn't just shoot it up exponentially here again, but perhaps we should follow this arc at least to this type of support. And, I think it would be pretty troubling if we got below that, but to this support, I think that's reasonable. And we can be very realistic, very logical, not emotional or fear-based or anything. We can just be using our own, brains to, think about our own finances, you know, and still propose these type of numbers without being weird. And I know a lot of guys, the superstitious, ditto heads, just say, we've never done that before. We've never done that before. You're only looking at 10 years. Okay? Like the world has existed, I mean, economics and trading in markets has existed for, 100 years, hundreds of years, right? Thousands of years if you count different types of markets. And guess what? Like this type of thing happens all the time. Yes, assets do go down. They breach their previous prices. There's nothing super special about this asset. Yes, everyone can hold onto every Bitcoin they've ever had, and Bitcoin can still go down in price because it's always based upon the trading price, right? It's not based upon who's holding it. I mean, if you guys aren't like actually using it in daily transactions, then the demand for it could actually decrease even if every Bitcoin, out there was being hodled. Okay? It just depends. Would people really demand it or not? And so are we reaching a saturation point where everyone who wants to hodl a Bitcoin is hodling their Bitcoins, and but there's no real demand for it on a transactional basis? That's where we could get a curve which slightly dips lower, where price gets stagnant even if people hodl their coins, and also it just could take time until some type of trading market is really established, especially in those countries which are starting to adopt Bitcoin, right? It could just take time. I'm not proposing like 100 years. I'm just saying for a couple years, we could face some hardship in this market. Be open-minded to that, and that other traders, right, who are trading other assets, not just crypto, they may also be aware of these possibilities, and they may just de-risk from an asset like this and put it into something else which might be performing better, like corn, you know, during this time period. Okay, maybe not over the long run, they might be putting it into something else, but they could just see, okay, well, Bitcoin's going to have a little period of consolidation. It might take a couple years, and so I'm going to get into something else that I know is growing at a steady pace. And it doesn't make Bitcoin any less valuable. It just means that there's not that much demand for it. So let's use this concept and keep it in our mind, and then let's just go ahead and compare it to those that log curve again. And now you can see that we are way off, but you know what? It's actually really consistent with the top of this chart. Not the log curve, but the top of the actual Bitcoin price, where this curve does look like it belongs to the top of the chart, whereas this curve doesn't really, right? It looks like something's wrong. It's just missing, right? So we can just be open-minded to this. It doesn't have to play out. I'm just saying, possible. Moving along, we can also take a look at fibs. Now, for this, I'm actually not going to use maybe the same way that everyone else does, but I'm just going to employ just an arbitrary model because all of this stuff is pretty arbitrary to begin with. The whole point is that you're consistent with it. So what I'm doing is I'm taking the 1 right here at the circle, and then I'm just putting the 0 at the top of that cycle. And what you can see here is that we pretty much got to the 382 if you use my method, okay? And then I did it again, where we touched my curve, not the bottom, but where we touched my curve. And then I pulled it to the top, and look here, we got to the 382. Now, where we touched the curve to the top, I pulled it again, and look, the 382. Where we touched the curve again, I pulled it to the top, and guess where we are around in this neighborhood right now? The 382, and that would suggest the bottom of the market, if we go by this trend, would be approximately $24,000, $23,000 to $24,000. So if you guys wanted a very conservative estimate based upon this type of fib method, which I've totally made up myself. No one is using this method because for them, it probably doesn't make sense. That's not how you're supposed to pull fibs. But guess what? I'm thinking out of the box, okay? I'm getting out of the bubble. I'm doing something different because I'm trying to see, behavior based upon a model that I'm creating. I'm not just following others, all right? And it is interesting that I can see the 382, the 382, the 382, and we happen to be around that area of the 382. We're not there yet. We did almost wick there, but we're almost there, and that this has been very consistent so far with what I've been talking about. That would legitimize, uh, pardon me, that would suggest that this perhaps original trend is more likely to be is more likely to be consistent with the fib model that I'm developing here, as opposed to the circle touch. So if we could just see that this circle touch is based upon pulling the fibs, but the trend for the closure of the candle bodies would suggest that 382 on the around 24,000, then we could see perhaps just like this touch was after the bottom of the market, right? It came later before it touched the curve. This touch came later, right? This was the bottom of the market, but it came later. Then perhaps we've, bottomed here, but because we're kind of rounding and we're kind of like collapsing over to kiss our own ass, then, perhaps later in the year, this would suggest like the fourth quarter of 2022, or perhaps the end of the third quarter, or around there, right? Right. Anyway, the last half of 2022, perhaps we do come back and retest this line, right? This might not be drawn perfectly, right? It could be off a little bit, and so it could be anywhere in the last half of 2022 where we come back, we contact this line, and then we generate a new contact point for the next cycle. And I think if we used this as the bottom, all right, like this, it really wouldn't change things at all, except to suggest perhaps that we did touch that, right? That we did touch it, and that the contact point might be later on in the year. And so again, like if we just want to ignore, if we just want to totally ignore that COVID touch, then that would also be fairly legitimate. But why do I suggest an alternative model? Eh, just because we want to have everything covered, right? I mean, I'm not trying to make an argument one way or another. I'm just trying to present the different possibilities. And the legitimacy of this touch is one possibility. Whereas I'm also open-minded, and that's why I have both charted out, that this would also be consistent with the 382 fib model that I'm presenting. And again, all of these are original concepts. This is not stuff that you're going to see anyone else presenting. It's just my own thought problem starting from first principles, right? Okay, so moving on from that, I want to actually get even deeper. You guys probably think that that's quite enough, but I've got more for you, okay? So let's just take a look at how we ended up finding these bottoms. For that, I am going to use the touches, and here's where you're going to see some extra validity, perhaps, to this circle, and why I can still keep this circle on the chart, even though we found that this model seems to work pretty good and would suggest that we're pretty close to a bottom, if not actually at the bottom, which is a possibility. But let's stay open-minded to this one, and I'll show you why. So first of all, let's go ahead to our first epoch, right? And this first epoch has a kind of blow off top. And then I would just suggest that there is a neckline that is being printed on this on the weekly. And if we use that neckline, you can see these wicks here, this wick here. You can find very easily a very, very obvious neckline to the top, to the blow off top. And the measured move on that is approximately here. And if you drop it down, guess where it brings us? To the cycle low. Interesting. Interesting. We found the cycle low just by finding the neckline of the top of the market. Okay, moving on to the second epoch of Bitcoin. Oh, look at this. We have the top of the market. There is an implied neckline on it. You see these two wicks, this wick, and then also this major turn. There's an implied top to this market. And if we put this neckline here, I mean, and look, there's a wick right here. There's a wick right here. I mean, no matter how you cut it, there is an implied, neckline to the top of this market. And, what are we, stupid? We're not stupid. We can think of on our own. Look at this. The measured move from the neckline is a drop down like this. And what does that line up with? The precise bottom of that cycle. Interesting. So not only do we have the touch, but we also have the bottom of the market, right? In terms of how we're thinking here. Let's move on to the third epoch. Well, in the third epoch, we have, there's a wick here, but we can also see that there is a kind of a, what would you call it? A cup and handle, an inverted cup and handle, where if we just ignore the wick and we just take the price action, all right, so look at that. I think that's a little bit clearer. You can see it here, right? Pretty obviously, and then you can see how I'm using it over here, where it's just this kind of, it's almost like a cup and handle. And so I'll just ignore this wick, right? This was a pretty extreme one. You could have some controversy, but I think that this was pretty clean because you did actually have a pretty solid trend there. And it's just in the beginning of the market. A little bit sloppy. Might be taking some creative license with that. This one, super obvious. This one, also very obvious. The measured move is right at the bottom of the market. Can we imagine a top of the market here? Just look at this. You can see the top of the market. So let's just look at this first overlap because this is the first time that there's really this kind of like a bull run. So it's almost like you've got a double top here too. It's not yet. It's not a double top yet, but you can see the beginnings of one, right? You can see it's attempting, but this is just totally different, but this is kind of trying to put in like something that we'll see next. And so I'll just call it the first overlap. You can see there is an implied top to this market here, where if we just consider this as kind of like a cup and handle, then you can see the measured move to the downside right there to the bottom of the market in COVID. Why did I keep this line up here? Because there might be legitimacy. based upon this set of logic that I'm developing, there might be some legitimacy to this, that this kind of overlap on this blow off top, right, which we couldn't really get into previously. The bottom was really established, right? But now we have like two bottoms of the market. We have like two tops and two bottoms all within one grouping. Whereas previously we just had an era of, like blow off tops and like pretty clear single bottoms. And then we just kind of like skirted along this exponential curve. Now the curve is flattening out, and so we're getting kind of double tops as we're flattening out, and we're also getting kind of like double bottoms. Yeah, they're still on curves, right? It's not a real double bottom, but it's kind of like a double bottom. And so what might that imply next? That perhaps we could have a real double top, and that we might even have potentially at some point where this second set takes over and this first set is no longer as valid as the second set. The more we curve, the more we flatten out. These two sets may be competing with each other, which suggests that the top of this market and the top of whatever we're printing right now, which we don't know what it is yet, that they might be in competition for the bottom of the market. And if we think that way, then we can suggest a couple projections. Here's the most conservative one, that this was sort of a just really janky, you know, um, you know, kind of like top to the market, and that we're literally at the bottom. Now, it's also a head and shoulders, and so that would actually be a perfect head and shoulders. So I would say that this formation has validity. In fact, if we were going to talk about like a first wave, right, that suggests the bottom of the market, I would even go so far as to say that we printed a head and shoulders and that that's the bottom of the market. That would be the most conservative interpretation. And what would that go along with? Our first trend, where then maybe just at the end of the year we come back and tag that somewhere around the same price. And so, in other words, we double top and we double bottom. Whereas here we had, a slightly lower top, almost a double top, and then we had almost a double bottom. It was just slightly higher. But what if we actually have a real double top and a real double bottom, right? I don't know. I'm just proposing things, guys. Okay, I'm just proposing things. So, don't get mad at me about this stuff, right? And so let's go ahead and think of a medium scenario. Because what if that's not correct? What if this trend isn't correct? What if we've proven that there is validity to this line, or at least shown that the possibility of validity to this line, and that this second downfall, right, the second, whatever, top, this kind of toppiness that's being put in, just like this is a second one. Maybe there's something over here that this is competing with the first one, and that at some point maybe it's going to be actually lower than this one. Because look at this, really at the bottom, right? Like, I mean, you could basically say zero, and then here we could say, this is way below the circle. This is almost even with the circle. This is pretty much even with the circle. And then perhaps this one is going to be lower. And so if this is our bottom for the first set, then maybe the second set is going to be even lower, right? Just a possibility. Sort of like this, but in reverse. And let's see, what would that look like? Well, we could have a medium scenario which kind of splits the difference and just uses the entire top of the market, which is a little bit more obvious. It's sort of like this, right? But we just use the entire top of the market, and then we kind of skirt like this. And I think I can zoom in here so that you can see what I mean. We just use the entire top of the market and then create this kind of medium suggestion of perhaps $20,000. Okay? And that wouldn't be unreasonable. That would be pretty reasonable, okay? And then let's go ahead and make a really kind of extreme scenario. Like what could really cause us to get down here if we're using these principles? Because this could be possible. And so we'll keep that as an open idea. Now we have these, that this is the possible bottom, this is a possible bottom, but what could go wrong here, right? And for that, I would propose that this could be the bottom. You see how this is getting lower and lower and lower. These wicks are getting lower. This wick is getting lower. This whole chart seems to be slopping over to the side. Whereas this chart was pointed up, this one slopped over. This one's slopping over also. And what I would suggest is that this would be a measured move from this and that it could drop here. What could cause that? Well, think about it. Think about it. We have a shoulder, a head, and then what would happen if we just have just a little price action? What would happen if we came down to the same price? Just dropped down a couple $1,000, dropped down like $5,000. What would happen? We would print a right shoulder. And what would you have? You would have a head and shoulders with a measured move to the downside. And this would be a valid head and shoulders with a measured move to the downside that would point us at $10,000. Now, could that be front run to like, 10,000 to 15,000? Yeah, but you want to know what's really amazing about this formation and how it leads directly here is that it perfectly correlates with that curve projection, which would again validate the authenticity of the touch over here. And so I'm proposing multiple models, 3 possible models for this era. I'm not trying to bias anyone on those things. I'm just offering all 3 of them, where perhaps 25,000 was the bottom. Perhaps 20,000 does have, it is in the running, right? Sort of like the top of this market, the top of this market, and that was the drop. And then we would have to wait to see what price action does, but we could potentially print a head and shoulders, which takes us down, right? A head and shoulders, which takes us down to $10,000. And that would correlate with the curve and the legitimacy of this price action. Just food for thought, guys. Food for thought. I'm not going to go too much further. I think that that's a lot to give people to think about. But it also gives us some targets, right? It gives us some targets. Now, this isn't a perfect model. There are some artistic liberties taken here. There's no guarantee on any of this. It's definitely not financial advice. It's absolutely just thought problems and thinking outside of the box. But if you did want, a couple prices to perhaps target based upon, you know, similar behaviors that we've seen in the past from Bitcoin, then, it wouldn't be unwarranted to consider, these price levels. And I should perhaps move this up just because that line most likely, would be moving unless we just fell straight down like we did here, right? Which it's possible that we just fall straight down. But, it could encompass, if this took time to print the shoulder, like let's say, just say it takes, a couple months to print the shoulder, then it might take a little bit more time to fall to the bottom. And so by then we might be $13,000, $14,000, $15,000, right? It would still pretty much be the same neighborhood. It's just if we fell straight down, that would be 10,000. But what I'm suggesting is that 10,000 is an absolute bottom. I don't have any way to consider lower than $10,000. The only way that I could see lower than $10,000 is, you know, I mean, I honestly can't. It wouldn't make sense. There's too much support here. You know, things don't change overnight like that, unless it's a global catastrophe and everything is just wrecked in every market. Things don't change that far. So are people saying like, $5,000, things like that? It's hypothetically possible, but most likely, right? Statistically, it's not likely to happen. This is still a very upward chart, okay? Yes, it's slowing down, it's curving, but it is a very, upwards chart. This is exponential. So again, like that was log, right? Like this is what it really looks like, okay? And so this is basically a straight line. But it is interesting that if we consider how assets move, in markets, they do tend to check back to these points, right? They do check back to these kind of liquidity points, and so it could make sense to check back into this area or this area right here, and then continue on our way. We did it back here, not to the extreme low, but we did it. And so it is within the range of possibility, especially as an asset matures. There can be points where it just topples over because people are chasing other things, right? They have other risk profiles that they're looking at. And so let's go ahead and go back to log. And so really, I wouldn't see Bitcoin dying. Like beyond that would be basically dying. We've already checked back to all these prices. That's what all these, retracements are about. We've already checked those previous prices. And so now we're really talking about the $10,000 level hasn't really been checked. The $20,000 level really hasn't been checked. And we've just checked the $25,000 level, but there's a couple more that are up for grabs. So be open-minded, okay? Yep, that was your alpha for the day. Stay safe and happy trading.